As mutual fund investors, what should you keep in mind before taking a risk? What are the calculations that needs to be done? Industry expert Mr. Gururaj has joined us to share his wisdom with real life examples.
So the first thing as an investor, what you should do is there are two things, right? One is the ability to take risk, and the second is willingness to take risk. Right? Today, when market is booming, all of us will be willing to take risk. Right? When markets are down, nobody will show the willingness. That is the best time to invest, but unfortunately, that is how our mind works. Right? When markets are corrected by Corona time 40%, if you come and tell them was a very good time to invest in equity, people will say, no, 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 boss, I burned my finger. Already my portfolio is 40% down. This will happen. So now at that point in time, you may not be willing to take it. Right. So that is what you have to be clear. But what is more important is understand whether you have the ability to take this. Right. You might have the willingness. Right. Something like people go and gamble. Right. Because they say they can make quick money. They'll go bet on horse ride or today bitcoins. They may gamble. Right. What is more important is whether you have a ability to take this. Ability comes out of various factors. Right. How is your family situation? Today, for example, I have two daughters, yeah, twins. Then me and my wife, we both are working. My daughters have gone and settled in US, so they are working there. So today, if you look at, I don't have enough kind of liability, so I can take more risk. Similarly, for example, there could be a person who has a lot of dependence on him. Right, his will be the only salary is on him, so the entire family is running on his salary. Then there is a limit how much you can take risk. So please be clear what is the ability to take risk. Why I'm saying is the biggest thing is when you take risk in your investment, you should have the ability to hold. If you don't have the ability to hold, then you will. It's not advisable to invest in riskier investment because market will see this correction. I think in the chart also, if you see, we expect that growth to happen in a direct, whereas in reality it will be like this. Right. So that's where I said first understand. Boss, I understand there is a risk. I'm willing to invest because I have the ability. Ability can come from the various factors and also your job, your occupation, the salary you get. So many factors are there. But as an investor, what I need to understand is, boss, do I have the ability to take it? For example, in the initial stage of your career, you can have a higher exposure to equity because you say, boss, I don't need this money. I have a long term, so I need not worry. Right? Whereas somebody who is coming closer to retirement, like what I did myself, if you ask me, 3-4 years back itself, my debt exposure started increasing. So today, if you see, my debt is 70% and equity is 30%. Right? Why I'm saying is, based on the situation, you have to take the call. That's where I said, please understand your ability to take risk. Very, very important. You might be willing because willingness comes out of two things. One is your own experience, and second is based on the current market situation. Market is bullish, we'll all be happy to invest in equity. Market is bearish, we'll not even go near equity. Right. So we need to avoid that.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.